coming in well below expectations, but raising the odds now for a rate cut at the Fed meeting this month. To discuss the state of the labour market, let's bring in our panel today. Amy Glasser, who's the SVP at Adecco, and Patrick Mueller, who's RFC and president of Bella Advisors. Thank you so much for your time, guys, both of you, on this Friday, which has been, you know, a very busy day, a critical piece of information that we got this morning as far as that jobs report. Let's start with you, Amy. What were your takeaways from what we got?
Although the headline numbers did appear somewhat soft and we do see some cooling, it's still a competitive market depending upon the industry, whether it be healthcare, leisure and hospitality, or by geographic region. So the Southeast we're seeing is hot. So I would caution everyone not to let one data point signal the alarm bells just yet.
Okay, what about you, Patrick? What do you think? I mean, we had an unemployment rate of 4.3%, which was, I think, the lowest level we've seen since about 2021. But, I mean, it doesn't seem to be, to Amy's point, I mean, screaming alarm bells or anything, you know, things aren't collapsing. But just what were your takeaways?
Things are pretty strong, I think, in the overall markets right now. And I think a lot of people are very hesitant. I think a lot of companies are very hesitant with all the tariff stuff that's still up in flux, what's going to be happening with interest rates with the Fed, which I think this definitely, you know, helps strengthen that a move here in September of bringing interest rates down. And I think a lot of that's going to be affected, like you saw with government jobs, as DOGE is still into effect and eliminating a lot of government jobs and redundancies. We're seeing that offset like you saw with the healthcare sector. So I think moving forward, once we see a more optimistic path moving forward, I think you'll start seeing an uptick in jobs.
I just correct myself, there's a higher since 2021. Depends on how you look at it, glass half full. But Amy, on that note, I mean, what does this now mean for the Fed? I mean, you said, you know, it won't just take one data point, but they've been looking at everything. And Powell had said at Jackson Hole that, you know, they were perhaps going to be focused more on the downside risks to the labour market. And, you know, if you look at the pricing in right now, as far as what the bets are, you know, it looks like 100% or so on a 25 basis point cut this September, and then 2 more in October, and then again in December.
I'm not an economist, but I certainly would think that the 100% bet I would agree with. We're getting ready and gearing up, though, for the September surge, which we've seen historically for the last few years, and I anticipate we will continue to see. A couple other factors for the remainder of the year, Sam, too, to look out for are peak seasonal hiring. So historically, you've seen a lot of e-commerce wait until November to really pick up hiring, and we're seeing that pull forward again this year into October. So I anticipate hiring to pick back up in September, October, and then we'll have to see what that means for November and December. But I still think we've got some more hiring to do before the end of the year.
Okay, more hiring to do. You know, I just want to get your thoughts about that, Patrick, because I was speaking to a guest earlier this morning who said that, you know, maybe the market is getting this wrong a bit, that, you know, what we're looking at is not cyclical, it's actually structural in nature, because if you take out the gains that we'd seen in healthcare, they were of the thinking that, you know, the labour market is in somewhat of a recession and that basically monetary policy is not going to fix the problem. I mean, would you subscribe to that? Would you give any credence to that view?
Yeah, I don't know that I give much credence to that. I think you're seeing a lot of employers right now really cautious of where we're moving forward. But I think long term, with us now being able to sell into a lot of different countries like China and Europe and countries we haven't been able to sell into before, and you're starting to see a lot of manufacturing coming back here to the U.S., long term, I think that the job market is going to explode here in the U.S. And I think it's going to start doing really well. But I think it's going to be a tough time getting to that point, because we're going to start seeing the impact of these tariffs coming in on the pricing here in the third and fourth quarter of this year. So I would expect a pullback in the markets going into the, you know, here through the third quarter, the fourth quarter. So when it comes to jobs, you know, it's just going to take time. It's going to take time for things to kind of turn around. But I think what you said was accurate, which is it's a restructuring, and I think it's going to be very solid moving forward.
Yeah, what do you think of that, Amy? Because, certainly it seems that this administration very much is in the business of trying to onshore those jobs. They're trying to lock in deals with various trading partners to fix in, huge amounts of FDI, and even Trump talking about, hey, look, you'll be let off the hook with regards to tariffs if you invest here. No doubt these things take time, but, you've already got a number of economists talking about the fact that they could see a reacceleration next year, which would be job positive. So, looking a bit sort of longer term, what are your thoughts?
I agree. 2026 and beyond is probably we would see that impact. One trend we are seeing today, Sam, is that employers used to have this great need for speed and really accelerated their hiring velocity. And we're seeing them take more time to hire candidates. So the onboarding has become lengthier, and employers are trading quality over quantity at this point in time. So there's a huge focus on retention, upskilling, and really retaining that workforce they have today in the short term. And to your point, we'll see an acceleration in the long term as some of these policies take effect.
Low hiring, low firing kind of environment that we're in right now. And, the other anecdote is the fact that people just don't want to lose people because they know how hard it is to rehire people. But Amy Glasser and Patrick Mueller, it's been a fantastic chat. Have a great weekend, both of you. Thank you for joining us on the Schwab